Thank you very much, Vicki. I have to say, for those who are hoping to get away from the Dartmouth folks, my father and grandfather went to Dartmouth, and when, and when I was very young, I lived in Sierra Leone because my father taught at Dartmouth and took a number of students over there for about 6 months when I was very, very small. So we can't quite break away from Hanover, I'm afraid to tell you. But Vicki, thank you very much for that introduction and for inviting me to speak today. I was very excited with my old friend Dana Rice, meaning I've known her a long time, not that she's old. When she asked if I'd do this, I was very excited. And as I've learned more about Opportunity International, including hearing your presentation today, it made me realize just how tightly joined really the World Bank and Opportunity International are in many of the ways we look at the world and many of the ways that we approach financial inclusion and the role of women in development broadly. So this is really timely, being fairly new to the job, only about 3-4 months in, and I really appreciate the chance to talk to all of you. What I'd really like to do this morning is have a chance to answer questions and exchange some ideas a little bit. But before we get to that, there are 3 things that I was hoping to touch on. First is what the World Bank does exactly, including my role there. My sense is often people know of the World Bank but don't necessarily know the particulars, so I just want to touch on that a little bit. And then talk a bit about the transformative role that financial inclusion programs like those that Opportunity International runs can have in reducing poverty and increasing the life chances and well-being of people around the world. We've seen this, the data's there, the research is there. I want to talk about a couple of aspects of that. And then I want to just raise a couple of big picture questions about where the field of development is going and what we see going forward, which I think is always quite important to do. But at the top, before I get started with some of that, I'd like to point out that in the midst of all the challenges we see in the newspapers and in the countries where we work, economic, political, social, we've seen major reductions in the number of people living in poverty over the last 25 years. To be specific, in 1990, 37% of the world's population was living below what was considered the line for extreme poverty. Statisticians adjust those numbers over time, of course, so the actual number changes a bit. But that was 37% of the world's population just 25 years ago. By 2012, the number was down to 13%. And this year, the World Bank announced that it now stands under 10% for the first time in recorded history. Single digits. So as the World Bank's president, Jim Kim, has been saying recently, this is the best news in the world. It's the best news in the world. No one happens to be talking about it, but it is, in fact, the best news in the world. And we should all be very happy about it. And those of you at Opportunity International, those of us at the World Bank, ought to take some portion of pride for having played a role in that. Neither of our organizations did it all, of course, and I'll talk about some of the macro drivers behind some of that, but we all ought to take a bit of pride and a bit of a recognition that we are in a place which is much better for very many of the people we care most about than the world was 25 years ago. So I'll come back to that, but I wanted to say it at the top, being fairly new to Washington on the professional side. I grew up here actually, but then moved away for about 20 years. Coming back and being part of federal government, I realized how much we focus on the dysfunction and the pessimism and all the things that are so extraordinarily frustrating, including getting confirmed by the Senate, by the way, which is not quite as easy as it may seem when you just read the quick bio. That's nothing fun about that. But I think in that context, it's worth pointing to those things which actually are very good news and do show that we're making progress and we know some things that are working out there. So I wanted to frame the discussion today in light of the fact that we know a lot of what works out there in reducing poverty and improving life chances. And part of the challenge that we all have is in figuring out how to expand what we know works, how to take it to scale, how to spread it to more people who aren't seeing some of the fruits of what we know is actually successful out there. So what does the World Bank do exactly, and what do I do at the World Bank? My job is to represent the U.S. on the bank's board of directors. It's a resident board, meaning that we're there all the time, unlike most corporate boards or unlike Opportunity International's board. We have multiple board meetings every week and so on. The U.S. is the largest shareholder of the bank with about 18% of the total shares, and no other country has more than 5%. As a result, we have considerable say in the bank's policies and projects and really how everything works. So what I do is A, vote the US's shares on approving or not approving the various projects that management brings forward, And relatedly, I work with banks management to ensure that its strategies, its policies, its operations are in line with our country's interests as the largest shareholder and one of the founders of the bank. So as any other corporate board, working closely with management, guiding, and then at a certain point, taking the votes on whether or not we want to proceed with particular types of loans or equity investments or whatever else that we're doing. As a little bit of background, the World Bank's a cooperative bank, essentially, with 188 member countries who are represented on the board by 25 executive directors. The headquarters are here in Washington, but it has over 15,000 employees in 120 countries around the world. At this point, we do about 60 to 70 billion in loans and equity investments in a given year. And as Vicki has mentioned earlier, the bank has set two goals for itself, two really framing goals that drive everything we do at the bank. And the point is to achieve these by 2030, so within the next 15 years. They're simple and they're ambitious. Number one, as Vicki mentioned, end extreme poverty by decreasing the percentage of people living on less than $2 a day to no more than 3% of the world's population. So effectively ending extreme poverty. We can come back to $2 a day. If you are now getting $2.10 a day, does your life fundamentally transform? We can talk about that. The role of insurance is important there because really even if you're slightly above it, the real challenge is a bad crop yield, a loss of a job. There are things which really make you quite vulnerable we have to think about, but this is the measure that people have used for some time. And so what we want to do, number one, is get less than 3% of the world's population under that number, get everyone else over it. And then secondly, and very importantly, because people often don't think about it in this lens, is we want to promote shared prosperity by fostering the income growth of the bottom 40% for every country on earth. So we talk an awful lot about inequality quite broadly. The way we look at it is how are the poorest 40% doing in every country, and are we making sure that economic growth is translating to them as well? So it's really that shared prosperity which is core and is crucial. As we all know, a country could be a middle-income country, but too many people can be left behind. You can be a high-income country with too many people left behind. So shared prosperity is the other core goal that we focus on. Ultimately, the bank can be seen as an impact investor, really, one that was formed 7 years ago by a unique international partnership whose goal has always been to support economic growth and reduce poverty in the developing world. I'll give two minutes on the bank. Some of you often are familiar with or hear about the Bretton Woods organizations. You might know 70 years ago, coming out of World War II, essentially the US and the UK got together to think about how to reduce global risk, promote stability, and we created several institutions. The World Bank and the International Monetary Fund were the two that are most well known. Since then, we've added others, but essentially this was the foundation of what we call the international financial architecture of the global economic system. The idea was if we bring everyone into this cooperative bank, we work on, in the World Bank's instance, reducing poverty. On the IMF side, economic stability, being able to step in when a country is in particular financial distress. The idea was you're creating a rules-based system that everyone's participating in that hopefully, in the optimistic kind of eyes of those who put it together, would reduce conflict over time, would reduce poverty, would help us all work on some of the common challenges that we have across the world. So the US and the UK really launched it. There was a time also we were trying to set it's not monetary policy, but we were promoting the gold standard and trying to keep some currency stability going around the world. Things have changed, obviously, as we moved off the gold standard. But the point I just make about this is really core. This is a part of America's leadership in the world. It's part of how we've thought about what are the institutions we can create and we can support that offer stability, that try to reduce some of the misunderstandings or perhaps reduce the conflicts in whose rules will carry the day and so on. We can talk an awful long time about how well we've done in those 70 years on that and what changes we need to make going forward, but I just think it's important to understand the spirit in which the bank was created all those years ago. So I characterize the bank's work as providing two types of capital, financial and intellectual. On the financial side, we're a AAA rated and we're considered a supranational entity. We're seen as a high-quality underwriter whose equity to loan ratios are a good bit higher than those of commercial banks, and as a result, we can charge less than other lenders. Just importantly, we're a truly global institution, operating in countries where other lenders are often quite reluctant to go, and where local governments, importantly, the national governments, often can't access the debt markets themselves at reasonable terms. Our real value add, however, comes from the expertise or intellectual capital that we bring to borrowers. For over 70 years, the World Bank has been operating in almost every political and economic environment imaginable. Remember, 188 countries even today, so it's not as though we're just picking off those countries that think the way that we might. And they've always been operating with the goal of developing countries that require external support and able to do so, particularly focusing on addressing basic human needs. I'll give you one example. We started lending to Korea in 1962 when it was actually, couldn't really pay back the loans. It was concessional loans or essentially grants. As you all know, of course, they've become supercharged since then. They're now our 7th largest trading partner. It's an incredible success story. The point is, a country like that we may start working with. Now they're really just a donor. They're not borrowing anymore, but you can see the evolution in many of the countries we work with. Our first loan ever was to France for its reconstruction after World War II. I'll talk about the various units of the bank, but we were initially very focused on reconstruction. We lent France $250 million to try to rebuild after World War II, and then of course the Marshall Plan came later and really added and pushed that along. And one of the last loans we approved was to build a metro in Lima, Peru. So we've done quite a bit over the years. We have experts around the world advising government ministries as they work to improve the lives of their citizens, and importantly, we're not afraid to highlight those officials in those instances where corruption or bad policies are creating obstacles to their own development and to reducing poverty in their countries. In terms of how we operate, the World Bank Group is made up of 5 units. First is the International Bank for Reconstruction and Development, which was the core initial unit. And IBRD lends to countries that are more creditworthy, generally those that are middle income or on the wealthier end of low income countries. We provide relatively cheap loans, as I mentioned before, alongside that expert advice for specific projects, and that goes from water filtration to regulatory reform to promoting educational access in rural areas across the board. The second unit is the International Development Association, which came later, and which does very similar work to IBRD, but does so via interest-free loans and grants, or what we call concessional loans, to the governments of the world's poorest countries. Those are less able to repay more conventional loans. And then there's the International Finance Corporation, which lends and invests in the private sector exclusively. The IFC makes up about 1/3 of our portfolio in any given year, and it's a crucial source of financing in many emerging and frontier markets around the world. Again, going to those places where often private capital won't go on its own. I've been saying in the boardroom a lot recently, quoting Bob Rubin, the former Treasury Secretary, he would always say, capital's a coward. And we've seen that in the last year as money is rushed out of emerging markets. The point that I often make and we talk about in the boardroom is our capital can't be. So while capital as a concept does often flee risk and run at the first sign of trouble, what we have to do is make sure that we're in those places where others don't go so that we can step in where the market has failed or where there's real need and real opportunity for us to do our work. And there are 2 smaller units that I won't mention. One's the Multilateral Investment Guarantee Agency. I guess I am mentioning them. It does political risk insurance, and then we have another unit that does international arbitration and dispute settlement. So that's a bit of what the World Bank does and who we are, and I'm happy to talk about it more later if you all have questions. But financial inclusion is the point that I really wanted to get to today. And I would just say that within the various things the bank does, we've been quite focused on increasing the number of people across the world who don't have access to financial services, much as you all have been doing. Earlier this year, we announced an effort to achieve universal financial access by 2020. That's an effort, as many of you might have heard, to provide access to financial services to the 2 billion people who currently do not have access to financial services around the world, 75% of whom are in just 25 countries, and 32% of whom are in China and India alone. So this is a major push for us, and it's important to note, as Vicki was saying earlier, that this is not just about expanding existing microcredit facilities, which many people are aware of, but also offering savings products, mobile payment mechanisms, and even insurance, which can have a very important smoothing effect as well. That clearly is something that's changed over the decades, and clearly Opportunity International has been quite out front in changing as things have moved forward. The bank and others have done considerable research to show that increasing that access to financial services, especially with savings and transaction accounts, can and does help reduce poverty. The data is there, there's no question. While it's not a panacea in itself, it is an important tool in a country's toolkit, and it's especially additive economically for those countries starting with particularly low levels of access. So as I look at the places Opportunity International works, what you see is you're in a lot of places where there is particularly low access. That's where you get the particular bang for your buck, the particular value add. And so that is essentially, you guys are in the right places. You're stepping into those places where you can have the most impact more broadly. What we also know, and the research also shows quite clearly, is that a key to improving the fortunes of poor people throughout the world is bringing women into the banking sector specifically. We know, and again, the research shows it time and again, that women who have greater financial resources are more likely to invest in the health and education of their children than men are quite often. And those are the investments we all know that pay off most significantly over the long term. Again, it's also what clients are saying, the 3 million of the 8 million you talked about, education and health are the things people want. It's also where you get the biggest impact over time. So as Jim Kim has said recently, bringing women into the formal financial system is an example of where doing the right thing is actually, it happens to also be the right economic policy for a country as it goes through its development. So there's a real synergy here, and it's not a surprise to you all have been thinking and living about many of these issues, but the more you get women financial access, the greater good you're going to do for the country's economic growth broadly, and it's a place where relatively small investments can have a quite large return. In this context, it's important to note that there has been significant progress in recent years on increasing financial inclusion. In the last 3 years alone, 500 million people have opened bank accounts for the first time, bringing the number of people without one from 2.5 billion down to 2 billion. Plenty of work still to do. We shouldn't go clapping too loudly now, but 20% decrease globally in just 3 years is really quite striking. It's really quite remarkable. And an important element of that success, of course, is the availability of new technologies that allow digital payments and digital cash transfers in more and more places. I was just in Peru for the World Bank's annual meetings, and I was able to visit a relatively poor community on the outskirts of Lima, whose senior citizens had recently become part of a social insurance scheme called Pension 65. Essentially, it's a cash transfer program of $38 a month to each participant that provides needed support to a lot of the senior citizens there in this community. Much like our Social Security, really, it's a social insurance scheme. And it's been successful in improving the lives of thousands of Peru's older and more vulnerable citizens. Importantly, it's not a standalone program, and this is the point that I think Vicki was getting to. It's not just doing those financial inclusion programs. The bank has also been working with the Peruvian government in the very same community to provide preschool education and nutritional programs, and we've seen significant success there as well. Over the last 10 years, Peru has seen rates of stunting, which is due to malnutrition and which has significant impacts on the life chances of people over decades to come. The rates of stunting in Peru over the last 10 years have gone from 28% of all kids down to 14%. So while that's 14% too many, the point is that Pension 65, paired with some of these other initiatives, is having a considerable impact there and is, I would argue, moving Peru forward quite notably. But what was especially interesting to me, and this is part of what I really want to get to here about the success of Pension 65, went far beyond the economic impacts that it had. What a number of the participants said to me when we were talking, and many of them, by the way, were farmers from the Andean region who had moved to Lima and they still went back and forth, was that now they had a bank card that they got these cash transfers for from El Banco de Nacional, which is the Peruvian National Bank. They felt connected to their government for the first time. And as a result, they felt pride and a connection to Peru in a way they had never felt before from having this card, this one card that said Banco de Nacional. Now keep in mind that Peru is a country where the Shining Path wreaked havoc not very long ago. And while it's what we consider a middle-income country, there's significant inequality, especially throughout the Andean region. And there's terrible poverty that the central government has been grappling with for a long time. So for these relatively poor elders, most of whom have been farmers for most of their lives, to say they felt a connection to Peru's national government for the first time was quite noteworthy. And I was struck in particular by it because of the bank's work in other parts of the world that are racked by conflict. I can mention Iraq, other parts of the MENA region. You can go into the Great Lakes region in Central Africa, any number of other places, but where we're really grappling with this question of how do you do your work in a place that has significant conflict. And what was interesting about this particular comments on Pension 65 was that it was really building trust between government and citizens. It was establishing the social contract, essentially, which is, we all know, is a necessary but very elusive first step for the government in establishing their credibility in order to create functioning institutions of many other sorts. If you don't trust your government generally, how can you trust your courts, your police forces, even your schools? So what struck me about this Pension 65 program is that it showed me how well-run financial inclusion programs can build and enhance that basic social trust between a government and its citizens that can have even more profound and much broader impacts. And while I've long understood the importance of government providing basic constituent services like garbage collection and road maintenance, fair policing, and so on, I hadn't thought of simple banking services in the same light, and we should. Because when someone enters the formal financial system, she's in fact entering a rules-based system that connects her to what we used to call in anthropology imagined communities, a nation, a regional trading network, even an international system of value and exchange. A defining community whose members are often imagined in that we never meet them. And that's significant above and beyond what the practical benefits are of having a bank account or what the practical benefits are of having mobile technology that allows you to better price your product because you're getting information from a broader set of markets throughout your country, or any number of the other things that we often think about when we think about the practical benefits of financial inclusion. By feeling connected to the larger imagined communities, regional, national, otherwise, one begins to have a stake in their success. One becomes more engaged with her broader society and with those people outside of her immediate circles or that she knows directly, beyond her village, beyond her neighborhood, beyond her social circles, beyond her ethnic group. It offers the chance to see across the simplistic lines that often divide us, and perhaps it offers a means towards working for broader change within that context. Change and betterment, of course, whether personal or societal, only comes when someone can imagine it and when someone has the mechanisms to affect it. Bank accounts and loan products can't cause that change themselves. I'm not pretending they can. But part of what I saw in Peru is that they might play a catalyzing role or an accelerating role in those larger processes that matter to many of us in the developing world and in the development field. And while that may not be the primary intent of expanding financial access to more of our peers around the world, it is a benefit that should matter to many of us nonetheless. It is yet another reason to continue focusing on financial inclusion as an important policy priority and as an important tool in increasing the fortunes of poor families around the world. Looking ahead, with all that in mind, I'd like to look ahead just a little bit and ask a few questions that perhaps can kick off a conversation. First, I wonder where we're going in the field of development. And I mean that in a very open spirit. We've had considerable success, but I do wonder where we're headed. We have grand plans, we have extraordinarily talented people and extraordinarily effective organizations working in development broadly. But the world's changing rapidly, as we all know, and it strikes me as very important that we continually pay attention to the path ahead and not just to where we stand or to the path behind. Now, the point here I'm making is one could argue that for the last 20 years, many of the gains in development have been driven by just a few macro drivers. China and India have liberalized their economies quite significantly, and relatedly, commodity prices have steadily and dramatically increased for quite a long while. This, and we could also talk about the advent of the digital economy as another major macro driver, have changed the landscape in ways we couldn't have predicted back in 1990. 1990 was 25 years ago. The wall had just fallen. We had no idea what that was going to mean. We didn't have an internet. And I often think about the internet as being the third industrial revolution. You think about the steam engine causing the first industrial revolution, radically changed modes of transportation across the world. And then you could think about the assembly line as another industrial revolution that radically changed modes of production across the business world. And now we have the internet, which is radically changing modes of communication. And I think in each instance, we didn't quite know what was going to manifest from those changes. We knew there was a significant breakthrough, it was a significant way of doing things differently. We're at a bit of that moment in the digital economy. And so I mention it as a third aside. I'm not quite sure if it has driven as many of the changes in development as the first two, the liberalization of the two largest countries' economies and largest countries in the world, and the rise in commodity prices, which has lifted so many boats across the developing world. But I know it's a very important one. And again, 1990, 37% of the world's population in poverty, now single digits. So wonderful, but I do wonder where we're going. The question I would ask us all to consider is, if China's growth is slowing considerably, perhaps for the foreseeable future, hard to tell, but perhaps, and if commodity prices are down immensely, which they really are, and it's not just oil, metals, agriculture, 30 and 40% declines in the last 2 to 3 years. I mean, these are significant decreases. China, you may have seen, their imports went down by 18% last quarter. So if one of the largest buyers goes down an awful lot, the price goes down an awful lot. These are really significant changes we have to think about. So my question is, so what will drive growth and poverty reduction in the next 2 decades? Will the environment we're entering offer more opportunities for truly inclusive growth or fewer? And if we have a sense of that, if we figure that out, how do we accelerate or decelerate those trends? How do we play off of those macro drivers in a way to accelerate the things that we want to happen and decelerate the others? How do we take advantage of whatever shifts are going on out there? How do we most effectively overcome the barriers to the successes we've had over the next 25 years? The various boards I've served on, we always ask the CEOs of the organizations, what are you seeing around the corner? And this is always the fundamental question. We can often see what's 2 steps ahead. There are a lot of people who can figure out the logical steps to take there, but what's around the corner? And this is the question I would ask us all right now, is where are we headed over the next 20 years, assuming that we're not going to see some of the winds at our back we've seen for the last 25. And then we better come up with some strategies to address the policy issues that we have the greatest concerns on. I personally think entrepreneurialism is something that we haven't figured out how to institutionalize and scale quite as well as we could. There's something there. Some people will say it's too small ball, it's not going to get you where you need to go. But whatever it is, we need to be thoughtful. We need to really push on that. The other question I would ask is, what other institutions should we bring into these discussions? What are the key policies that we as multilateral banks, you all as NGOs, as government entities, as business enterprises, who else should we be bringing in? And then what should we be insisting are the standards and the foundations that we're all going to agree to in helping people to come out of poverty and to achieve their goals, economic and otherwise? So who are the other partners? Who else needs to be part of this discussion? Who else can be playing in a way that maybe they haven't yet? And I don't know the answers to all these questions. I may not know the answers to any of these questions, but I know it's important to ask them. As policymakers, as program practitioners, as concerned citizens of the world, if we're not looking forward and trying to look around those corners, we're likely to be less effective than we would otherwise be. So I would ask that we remain curious, we remain focused, and we remain committed to solving tomorrow's problems as opposed to yesterday's. Looking forward and thinking about those things rigorously is the only way that we'll continue the successes we've had to date, and I think that's the core thing that we ought to stay focused on. So with that, I'll stop. I would love to take any questions, and I will proceed however you'd like me to.
You talked about maybe a third of your financial lending go to private groups. Mm-hmm. You know, given that what's gone on with foreign aid and all that's been written about the corruption and inefficiency and the like, is there a desire or a plan to increase the role of the private groups in delivering financial services? And then secondly, how good have y'all been in terms of your repayment, or, you know, if you count either not payment or in arrears? You know, a lot of times you roll the debt, you roll the debt, you roll the debt. I'm calling that a bad loan. Mm-hmm. What would your financial record be?
So all the rating agencies have us AAA. So in that sense, we've done very well at getting our loans back. As I say, we have two. We have the IBRD, which is going to the more creditworthy countries, and then the IFC, which is going to the private sector, and those have done very well. The IDA, which is to poorer countries, is the place where we often have 50-year loans at no interest, and in a sense, that's a bit of rolling over. That's structuring loans, though, in such a way we understand that countries need something that's closer to a grant. But for the part where we're actually expecting to get repaid. As I said, AAA rating, which is hard to come by these days, so we've done a very good job. Importantly there, I mentioned the equity loan ratios. Historically, we'd been about 25%, and while a lot of commercial banks, I think Basel III requires 12%, we've gone down to 20, so we can have more money to put to work, but we're still comfortably safer than most financial institutions. In terms of using the private sector, yeah, one of the things that we think is so important about our private sector loans, I'll give the example of climate finance. Generally, we'll go into a project, we can lend to a country, and then they turn around and institute something, building an airport, putting an educational program in place, whatever it is. When we lend on, let's say, climate finance for power generation project or something else, if we lend to a government, we generally get very little private sector money coming in. When we lend through the IFC, they take about 15% of a particular deal. 45% of that deal then comes from the private sector, so call that a 3X crowd in, if you will, and the remainder will come from other quasi-governmental institutions. The point being, when we lend to the private sector, through the private sector arm, we get much more leverage from other private sector investors. So our point is that we can do a little, 15 cents on that dollar, and still get the whole project done, which means we can go get more and more projects. Specifically in financial inclusion, I'd have to go look. We haven't done as much direct lending. We've been working more on the policy side, working with governments on how to bring more players into the field to actually offer some of these services, working with their national banks, working with their cooperative banks in India and other places. So while we do some with banks and we'll lend to banks, for example, for them to turn around and do some micro lending facilities, that's not something that we have done as much of as some other arenas in terms of the direct investments.
Through the IFC arm?
Through the IFC, I'd have to look what it is. So it can be anywhere from, I mean, I've seen them at 20 million sometimes, 80 million, 100 million, I say is where a lot of them are. I can go get an absolute number for you. It can often go significantly higher, but it's usually in that arena. Mrs. Negroponte?
Conditional cash transfers have contributed significantly to that diminishing number of people below the poverty line. But for many of us, we are seeing the end or trap in conditional cash transfers. What are your ideas of how we move beyond?
So they've been an important tool, no question. They've been very useful. In many ways, the idea there is the person who's going to allocate those dollars most effectively is the person who's living in a particular circumstance and deciding, do I put a next dollar towards health or towards education or towards school books or whatever else. So the idea, of course, has been what's the most efficient way to get that money moving into the economy and so on. I think that where it goes from there, though, is the question of, so what else does someone have as the next step? So if it's a microloan so they can start a business, or in many instances, it's not starting a business, it's doing better with your current business. So think about how many people are smallholder farmers around the world. Well, often what you need if you're in agriculture and you have a relatively small plot is you need to get better pricing, and there's certain things that people are doing, trying to eliminate middlemen so someone can go directly to the aggregator who's going to export, and they might get 30% better pricing for their cocoa or for their soybeans or whatever else it might be. It might also be just being able to pool some money so that a particular village has a truck to take whatever goods to a larger market where they can sell it to a wider range of buyers, and they, again, can get more money there. You might just need some new seeds that actually are drought resistant, so you have more consistent yields and so on. So there are often things along those lines where it's just helping someone do a better job of what they're already doing that creates more wealth and gives them more independence and flexibility and so on. So I think this goes to my point, and then I think I'm being asked to wrap up. This goes to the point of always thinking holistically and always being sure we don't think we have that one magic bullet, but we have one tool that other tools need to come alongside and need to go kind of to a much larger approach to truly lift people and to really strengthen the entire system. I know you have plenty to do today, so I really appreciate you all having me here and allowing me to speak. I hope we get a chance to chat a bit during the break. I'm afraid I can't stay for the full day. But it's really an extraordinary organization. I applaud so many of you all taking the time out of your busy days to come here and to think about a lot of these issues and to talk to Opportunity International more directly. I will be sure that people have my contact information, Vicki, Dana, Kathy, others here. So if there's ever anything I can do, I represent all 310 million Americans over at the bank. So as I say, and my staff tells me this is very dangerous, I answer my own phone, I answer my own emails, and so please do reach out to me. Might take me a little while, I'm sometimes a little slow, but really, if there are any things I should know or questions I can answer, I'm always happy to do so. Thank you.